here on a Fed day. 25 basis point cut. That was expected, Carol Massar, but an update to that dot plot, taking a lot of folks off guard. You're seeing extreme moves right now in stocks, in bonds, and in the FX market.
Yeah, I mean, kind of across the board. I'm looking at something like housing stocks. They're down about 4% at this moment. Looking at bank stocks, they're down more than 4%. So, new narrative reset. I don't know, but it definitely feels a little bit differently today.
The Russell 2000 is something I've been looking at closely because it's getting hit right now hard. It's down to levels last seen since before Election Day. So giving up all of those post-election results down to lowest since November 4th.
Yeah, I wonder how much of this selling will be sustained into tomorrow. We've been talking a lot about how, people were waiting for this as the last big event of 2024. Okay, it's come. How is this going to continue, or, starting tomorrow, everyone takes off?
Well, that's what I am curious about is, does this become that buy the dip moment, or are we kind of at the mercy of, I think what you're alluding to is just kind of seasonality, the idea that a lot of people are kind of moving away. A lot of people are going to book very large gains on this year, so why take any sort of unnecessary risk over the next, 4 to 5 weeks until the president's inaugurated?
On the other hand, though, in theory, why wouldn't you buy the dip? I mean, if Jay Powell said anything, he said that the U.S. economy is really strong, and much stronger than the rest of the world. That's why they revised their growth target up, why they had to revise their inflation forecast up a little bit, and we still are coming with cuts, just not in January necessarily.
A lot of questions, though, as to exactly why this move would be so extreme. We talk about an S&P 500. More than 90% of the stocks in that index are in the red. Remember, the last time we saw this type of extreme sell-off was back in early August when that carry trade blew up. And before that, you have to go all the way back towards the beginning of the year when there was a lot of concerns about recession risk. We get the closing bells in New York with the Dow Jones Industrial Average down by 1,100 points or 2.6%. The S&P 500 closing back below 6,000, down 179 points or 3% lower. The NASDAQ Composite down 700 points or 3.5%. The NASDAQ 100 down about 3.6%. And the Russell 2000, 103 point drop today or 4.4%.
All right, so just going through those averages, folks, you've got 483 names in the S&P 500 lower, so almost all of them. Romaine, you just mentioned this. And Scarlett, if you go over to the NASDAQ 100, you've got 100 names to the downside, 1 to the upside. So you are seeing really some broad-based selling as we speak.
Yeah, it's pretty clear that the appetite for risk is not there today. You look at the IMAP and red all around, including when you break down the sectors into 24 industry groups as well. Still, it's notable that your outperformers and that they didn't fall as much as the overall S&P 500 are healthcare, consumer staples, and utilities, classic defensive sectors. Worst performers, consumer discretionary, real estate investment trusts, each down by 4%, and communication services losing 3.1%.
And your superlative on the day, the S&P falling its biggest post-Fed drop since March of 2020.
Yeah, we've also got some earnings crossing the Bloomberg terminal. We should just quickly mention Micron, certainly one of the names in the semi space. First quarter adjusted revenue, $8.71 billion. That is spot in line with what Wall Street was expecting. First quarter adjusted EPS, $1.79 a share. That's 3 pennies better. And then going to the outlook, the company says it sees a return to growth in the second half of the fiscal year and sees second quarter adjusted revenue, Tim, of $7.7 billion to $8.1 billion. And that is below the estimate of $8.99 billion. Stock
Look
down.
At this.
Yeah, almost
shares
12%.
down in the after hours, 12%, as Carol mentioned. Micron saying that consumer-oriented markets are weaker in the near term. Second quarter adjusted revenue coming in 7.7 to 8.1 billion, missing estimates of close to $9 billion. That's perhaps why we're seeing shares down about 8.6%.
Yeah, there were some concerns that perhaps Micron would be a little bit cautious heading into these results. Certainly the thing everyone's going to be listening for in the conference call is anything that says about the high bandwidth memory products, which is really the driving force, the growth area in its business, because the DRAM sales, they're just kind of there. It's the legacy business, and there might be a little bit of a glut in that inventory.
Yeah, and it's kind of interesting, too. We talk about a company that is much more wedded to the consumer space relative to some of its peers. They have a much better mix in terms of what they're doing with enterprise customers, et cetera. And maybe that's why you're seeing the reaction. And then, of course, there's just the obvious, which is this is probably the wrong day to miss on it.
Yeah, no kidding. And just adding on to that, second quarter adjusted EPS, that outlook now between $1.33 and $1.53 a share. That estimate was for $1.92. So just to keep in mind that lowered outlook for the second quarter. Also, the vibe after last quarter from Micron was that the consumer part of its business was actually slowly going to improve. So this definitely a hit.
And I guess to your point, I don't know if it was you or Scarlett that made the point earlier about this idea of sort of what actually is the next catalyst. And you kind of forget not only Micron, but you get FedEx, you get Nike, you get some pretty consequential companies reporting this week. And if they have misses, particularly if there are major misses here, are we going to see an additional sell-off here as people get concerned about the state of the market?
All right. Also seeing that it's the worst post-Fed day in 4 years. So again, just giving a little bit of perspective.
Keep that in mind when you do your gainers. I'm just throwing that out there.
Be kind to me.
In case
NVIDIA.
Are they all gainers today, Carol?
In case there any,
Well, it wasn't
anything
easy.
red.
It wasn't an easy
screen.
task, and I waited till kind of after the Fed decision. So maybe I should just move along. NVIDIA was up 5%, and it was a top gainer.
We'll
in the NASDAQ 100. Be kind, be kind. It's down about 1%. So it's been down, I know, 5 trading days in a row. Let's just move along. I'm just moving along. Here's something that you cannot dispute. Quantum Corporation. Yes, it's a microcap company. Yes, we did see a couple of trading halts today. The stock at its highs up 170%, finishing the day with 153% gain, $60 and change. It's about a $238 million market cap. At 19% of the float is shorted. It was out with a press release noting it's developed a new file system. It gets a little wonky and a little tech wonky, if you will, but it basically supports storage capability of NVIDIA. So I feel like tied to NVIDIA, you often get a little bit of a kick. And this one, really excited. It's actually for Alix, who I did not know had 2 pairs of Birkenstocks, but well, lo and behold, she does.
That's nothing compared to my 16.
No, I know. But my Birkenstocks are not on brand for me. Like, this is not something I would normally think of when you look at, the heels that I normally wear.
All right, so up 11% at its highs, finishing the day, holding on to about a 2% gain here. The company reported fiscal fourth quarter revenue and earnings per share exceeded expectations, issued an annual outlook that analysts described as solid. It's, soaring in the last quarter, this company. So, and this is one of our standouts in today's session. So now over to Tim, who had a lot to choose from.
Yeah, the easy job today, especially when we started to hear from Jay Powell. I do want to start with shares of Tesla, which were down as much as 11% in the session today. They just started tumbling following Jay Powell's press conference. Finished the day down 8.3%, still up more than 80% since Election Day, guys. So we do have to look at this one still with a grain of salt. But some of that euphoria, some of that has been pulled away. Also, shares of Broadcom finishing the day down by 6.9% today, down for a second day in a row following Friday and Monday's rally when shares moved higher by a whopping 38%. After yesterday's decline of 3%, it's down more than 10% from that all-time high that it did reach on Monday post-earnings. And finally, Sezzle, it's the buy now, pay later firm. It's about a $1.3 billion market cap out of Minneapolis. Shares just fell more than 20% after Hindenburg Research said in a post on X that it's short the company. A representative for Sezzle did not immediately respond to requests for comment. Shares falling 23% today.
All right, I'm going to the bond market, and then we'll get to some breaking news. The bond market had an incredible day. The sell-off across the board. It was the belly, though, that really felt the brunt of it. Those yields up by about 10, 11 basis points. So superlatives, there was a lot to choose from. The 2-year yield moving the most since of October. You also had the 10-year yield, the highest since May of 2024. You had a sell-off in the TLT. That's, of course, the ETF that tracks the 20-year. So it was very dramatic in terms of the slide that we saw within the bond market. We do have some breaking news, guys. I just wanted to point that out. Fox News says that Trump says he is against the stopgap bill. So.
Yeah, the stopgap
bill.
Well,
this is a big deal. I mean, we're facing a deadline, on Friday, December 20th, whenever December 20th is. And we had heard rumblings earlier that at least congressional leaders, Republican leaders, were pushing back against this. And now, of course, the president-elect coming in here. I wonder if this is going to add to some of the pain. You're actually seeing futures in the post-market trade on the S&P now extending their declines by at least a half percentage point.
So I think this answers the question whether the sell-off will continue into tomorrow because of this headline. The idea that a government shutdown would be in play once again is not something that people have been pricing in at all.
I also think it also, Elon Musk, right, making comments earlier, and I think we were all questioning, does he speak for the president? Does that mean, this is kind of what's to come? And it just kind of says a lot about kind of Elon.
But it gets to this issue, too, of Jay Powell was asked repeatedly about how they're sort of factoring in some of these Trump policies. And, of course, he's not president yet. And so I can understand why he doesn't want to answer that. But to say we're just looking through it or we're going to see through it is like, what are you talking about? Well,
I think that he has to say that because, the president-elect is not president yet, and we don't know to what extent he's going to implement the policies that he's talked about at this point. Is he using sticks? Is he using carrots? Is he, is it all talk? What's going on here?
But also, like, when has the market moved, though, on funding issues, guys? Like, we've been dealing with this forever. And it was, what, 2012 was when we saw? No, went back. Where did we see the downgrade?
2011.
2011, thank you. So it was 2011. Like, that was the big moment, right?
Yeah.
But we've had these shutdowns all the time. Like, I can't believe that this is going to move the needle on that end.
No, but we've got a lot more debt out there, too.
But
like,
I think, isn't it sort of the
position, I feel
broader,
like
the kind
it's
of the
getting
totality of it
questionable.
all, though, Alex? Like, I mean, the idea that it's not necessarily just this, but it's all of these sort of events kind of coming together.
Also, it's not just in the U.S., right? You look at what's happening in Brazil, you look at what's happening in Canada, you look at what's happening in Germany, what's happening in France. Like, all these G7 countries are dealing with fiscal issues and whether they can kind of sustain their spending.
Yeah.
Well, so much for a boring Wednesday.
All right. Well, Merry Christmas,
right?
everyone.
Merry Christmas.
And Micron's getting hit. Like,
Move
what,
to cash and
14%
go
now?
home. All right, guys. Yeah, and Micron, as you said, Alex, still getting hammered. So we'll watch that into the Thursday trade. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We'll see you again, same time, same place tomorrow for the closing bell.